I've been thinking about a concept called the flywheel effect and how it affects Bitcoin. In this video, I want to go in depth into this topic. Let's get started. First of all, what exactly is the flywheel effect? So, the flywheel effect, popularized by Jim Collins in Good to Great, describes how businesses can achieve sustained growth by accumulating small incremental wins that build momentum over time, eventually leading to significant breakthroughs. And the origin of this, the term flywheel effect comes from the mechanical concept of a flywheel, a heavy wheel that stores rotational energy and requires significant effort to start, but then builds momentum, turning more easily once in motion. And this is what a flywheel looks like. So we can see here, it's basically just a wheel, it's on an axle, and you can turn it. I don't know the exact terms of this, but basically, if you start turning it, then it'll turn. In the beginning, it'll be hard to turn, but then over time, it'll get easier and easier as you put more energy into it. And here's another example. So you can see a flywheel of an engine for a large rolling mill, a really large rolling mill. So what happens is if you turn this in the beginning, it's very difficult because it weighs a lot. You have to put a lot of energy into it. But then if you keep doing it over time, it becomes easier and easier to turn. And an application of this in business, the flywheel effect suggests that companies can't achieve exceptional results through a single dramatic move, but rather by consistently focusing on building momentum through small incremental improvements. Key characteristics: accumulating small wins, building momentum, and breaking through. So you may have, let's say, some kind of obstacle that you have to get through, maybe some kind of mental obstacle, maybe some kind of physical obstacle. Once you break through it, because of the flywheel effect, because you keep trying, you're persistent, you build momentum over time. Eventually, you break through and you see massive growth in a short period of time. And an example of this, Amazon has a flywheel that's pretty well known. If you go on YouTube, you can find a in-depth video on this. But what they did was they had low prices to begin with. They attracted more sellers and wider product selection because they had more customers. And then wider product selection and more sellers brought in even more customers. So now it's basically a self-fulfilling prophecy. People use Amazon and Amazon doesn't have to advertise really anywhere. Over time, word of mouth is going to make Amazon keep growing and growing because of the service that they provide. If you want to implement this in your own life, you have to focus on the small wins, build momentum, and celebrate successes. And now, how does this apply to Bitcoin? It seems like a completely different concept that has nothing to do with Bitcoin. It seems like a business concept. Why would something like a business concept apply to Bitcoin? And I'm going to explain it to you with this spreadsheet here. So this is my compound interest calculator that I built over time. It's been getting better and better. You can see it in the description below. The link in the description below will give you access to this. You can download it and you can do whatever you want with it. I'm not going to give you access, so stop asking for access. 54 people are asking for access to this. I'm not going to give you access. Just go to File, Download, and download the document to your computer. That's it. Pretty easy. And what I want to show you here is that Bitcoin has its own flywheel effect. You build momentum with small investments. So you buy, let's say, $10 a week, $5 a week, $10 a month, whatever you can afford. Any amount of Bitcoin, whatever you can afford, you buy that, you keep it safe, and you hold on to it for as long as possible. In the beginning, your purchases are going to seem big because they're a large portion of your total portfolio. So let's say you start with $10 a week. Your first $10 purchase is going to be 100% of your portfolio. After that, you're going to slowly add more and more, and your purchases are going to get smaller and smaller as a proportion of your portfolio. So let's say on the 10th purchase, your buy would only be 10% of your total portfolio. On the 100th purchase, your purchase would be only 1% of what you've contributed to Bitcoin. So we can see here, if you invest $10 per week into Bitcoin at a 35% growth rate, let's go even more conservative. We'll go with 30%. If you invest $10 into Bitcoin every week at a 30% growth rate, after 1 year, you're going to have $676. After 2 years, you're going to have $1,554. After 3 years, you're going to have $2,700. After 4 years, you'll have $4,200. And eventually, you go to 10,000. Then you'll go to 100,000. Then you'll go to 1 million. In this case, the flywheel effect is you put your energy into Bitcoin. You start the rotation of that flywheel by putting small amounts of money into Bitcoin, small amounts of value into Bitcoin. And then eventually, Bitcoin will carry your portfolio for you. Your money will be working for you. Instead of you having to continuously put money into your portfolio, eventually you could stop. You don't even have to put money into your portfolio at some point, and you can just see your portfolio growing. And here's what the flywheel effect would look like in action. So let's say you put $10 per week into Bitcoin for 1 year until 2026. In 2026, Bitcoin's price will be around $101,000. Your investment, if you put $10 a week into Bitcoin over the next year, it would be about $520. The estimate of how much Bitcoin you'll have, of course, this depends on the price. Price goes much higher, you'll have less. If the price goes much lower, you'll probably have a lot more, but you'll have about 0.0066 Bitcoin. So you'll have about 700,000 Satoshis. In a year, the amount of Bitcoin that you accumulated would be worth about $676. So your investment would be 76.92% of your total portfolio. But let's say you do this for 2 years. You would have invested $1,040. Bitcoin would be 132,000. You would have about 1.2 million Satoshis. 1.2 million Satoshis is 0.01 Bitcoin. Each Bitcoin can be divided into 100 million Satoshis. So in this case, you'd have 1,179,487 Satoshis, and your portfolio, all of your Bitcoin will be worth $1,554.80. But the amount of energy that you contributed to your portfolio as a percentage of your portfolio's total value would have decreased. It would have gone from 76.92% of your total portfolio after 1 year to 66.89% after 2 years. After 3 years, the percentage drops even more. After 4 years, the percentage drops even more. So after 4 years, you would be up about 100%. After 10 years, the amount of money that you put into your portfolio would be only 18.05%. Remember, in the beginning, your first $10 investment was 100% of your portfolio. After 10 years, your $10 investment is only 0.03% of your total portfolio. After 20 years, you'll have $425,000 worth of Bitcoin. You would have only have put in $10,400, and your $10 investment every week would be basically nothing. The amount of money that you invested would only be 2.44% of your total portfolio value. You can almost think of every $10 purchase as one tiny push on this flywheel here. And over time, as you continue to push and you continue to push, eventually the flywheel starts turning on its own. So you might be thinking, I won't be able to get enough Bitcoin. There's no point in even trying to accumulate some. There's no point because its price is too high. And I'm telling you this from my own experience and from the experience of multiple other people that over time, these small purchases will add up, and you're going to see that your portfolio has grown a lot more than you expected it to. This is also how Bitcoin's value compounds over time. What we see is year over year, Bitcoin's price increases by a certain percentage. The people who own Bitcoin today are probably looking for a double, maybe a triple, maybe a 10x growth. But then whoever they sell it to is also looking for a similar growth. But out of every sale of Bitcoin, there's a small percentage of people who buy it and then they plan to never sell again. So what's happening right now is that people are slowly putting money into Bitcoin. The momentum is growing and it's growing and it's growing. Eventually, the momentum is going to get so strong that Bitcoin's price is going to rise and rise and rise because this is another flywheel effect. It took a lot more energy for Bitcoin's price to go from $0 to $1 than it took from $1 to $2. Bitcoin education is another flywheel. It takes a lot of time and energy to start studying Bitcoin, but eventually when you do start studying Bitcoin, it becomes easier and easier over time. At some point, you're going to find yourself listening to Bitcoin podcasts for fun. So create this Bitcoin flywheel for yourself. Make sure that you're not always working for money. Make sure that your money is also working for you. If you put in the time to study Bitcoin, it becomes easier and easier to accumulate more. And the good thing with Bitcoin is that you don't have to continuously keep buying more and more. At some point, you may think that you have enough and you want to buy other assets. Even if Bitcoin is a small percentage of your portfolio today, the rate of growth is going to make it so that Bitcoin becomes a massive percentage of your portfolio at some point. So make sure you have at least a little bit of money going towards Bitcoin every week, every month, every day, however you want to set it up, just to make sure that the flywheel effect is working for you. If you contribute enough energy to Bitcoin, eventually it will cover your expenses forever.